Bitcoin and cryptocurrencies are going to be successful regardless of who the president is. If you go back and you look over the last 15 years, we've had Republicans and we've had Democrats. We've had people who were sympathetic and we've had people who were abrasive to the asset class and to the assets and to the investors. Look at how far we've come. Multi-trillion-dollar market cap and only continued adoption. Giovanni, I'm a simple man. I got a small brain. And all I know is that when they print money, and there's more money sloshing around the system, asset prices go up. And if they happen to be printing money and expanding the money supply at the same time that they're cutting interest rates and they're making money cheaper, asset prices go up even more.
Over the past 15 years, crypto assets have demonstrated remarkable resilience, navigating various presidential administrations with fluctuating degrees of support. Despite the inconsistencies in political sympathy towards cryptocurrencies, the market has achieved significant valuations and continues to expand, driven by their inherent value and technological foundation. In an interview with Giovanni Pigni, Anthony Pompliano, the founder and CEO of Professional Capital Management, believes the relationship between money supply, interest rates, and asset prices plays a crucial role in the aforementioned growth. Anthony believes there is an observable trend where individuals view Bitcoin as a long-term savings asset, akin to a modern savings account, while utilizing stablecoins for everyday transactions. This dual currency framework enables Bitcoin to appreciate in value as it fulfills its role as a store of wealth, complementing the utility of stablecoins. Furthermore, the recent introduction of exchange-traded funds, ETFs, and participation from major financial institutions bolster the case for Bitcoin as a superior store of value. As the market evolves, the potential for alternative cryptocurrencies, particularly those offering faster and cheaper transactions, adds a competitive layer to the landscape. Watch clips from the interview to hear more about Anthony Pompliano's perspective and his conversation with Giovanni Pigni. Don't forget to like this video, subscribe to the channel, and enable post notifications for more updates and in-depth content. Thanks for joining us again. Enjoy the video.
Bitcoin and cryptocurrencies are going to be successful regardless of who the president is. If you go back and you look over the last 15 years, we've had Republicans and we've had Democrats. We've had people who were sympathetic and we've had people who were abrasive to the asset class and to the assets and to the investors. Look at how far we've come. Multi-trillion-dollar market cap and only continued adoption. And so, yes, of course, we would like to have politicians that were sympathetic, that were supportive, that were trying to help this stuff be created within the United States and also be successful globally. But it is going to be successful regardless of whether they are supportive or not. That is the beauty of these assets and of this technology. And so regardless of who wins in November, I do think that you are going to see prices continue to go up. You know, one of the things that I always point to is over the last 50 years, if you look at the stock market, it has gone up under every single president except for one. That one was George W. Bush, and it's because right as he was leaving office, he got hit with the global financial crisis. But every single president, both Republican and Democrat, has overseen a up market in the stocks. Why is that? It's because we devalue the dollar. And so Bitcoin and cryptocurrencies will continue to go up over the long run, regardless of who the president is. All I know is that when they print money, and there's more money sloshing around the system, asset prices go up. And if they happen to be printing money and expanding the money supply at the same time that they're cutting interest rates and they're making money cheaper, asset prices go up even more. And what we're watching right now is a regime change in global liquidity. You have interest rate cuts in the United States, you got them going on in China and elsewhere around the world. You have the M2 money supply in the US expanding, and asset prices are going to benefit. And so people try to make this stuff really complex, but it's pretty simple. If they are expanding and stimulating, asset prices go up. If they are tightening and draining liquidity, asset prices go down. The word stimulus is a very important but very specific word. Their job is to stimulate the economy. They're going to make things get better. They're going to make asset prices go up. And that's the regime that we've entered. Once you change regimes, you can't flip-flop. You can't go loose 1 month, tight the next, loose again, tight again. You either got to be committed or not. And if there's one thing that the Fed is they're committed. And so we saw at the end of 2021, November, they started talking about we're going to raise interest rates. And then they did. From March of 22 up until September of this year, they kept raising interest rates and holding them at a high level. But in September of 2024, they decided that they're going to start cutting interest rates. So they're going to cut. And maybe they did 50 in September, and maybe they pause, or maybe they do another 25 basis points. But the trend now is down. They are going to bring interest rates down over the next 12 to 18 months, and that is going to serve as a tailwind for all investable assets. Solana is cheaper and faster, and I think people who are building stuff are going to want to operate on a platform that's cheaper and faster. And as more people begin to use that platform, the price of the asset's going to go up. And so far, that's pretty much what's happened. I think that since we originally bought, we have seen Solana go up about 300%, tripled in price. At the same time, Ethereum is essentially flat. And I expect that trend to continue. I think Ethereum will go up in price, but I think Solana will go up more. And so, people have heard me say before, Bitcoin is an asset that I plan to hold and give to my grandchildren. It is something that is a store of value that I have deep conviction over the long run. I look at the smart contract platforms as a technology that there's a lot more competition, there's a lot more disruption, and I don't have the same conviction over, kind of a multi-decade hold. For me, it is more so over a cycle. And so in this cycle, I think that Solana will outperform Ethereum. The beauty is if I'm right, then I'll be rewarded. If I'm wrong, I'll lose money. And so, let's see what happens.
Pompliano highlights the correlation between money supply, interest rates, and asset prices, noting that expanding liquidity typically boosts asset valuations. He expresses confidence in Solana's growth potential compared to Ethereum, predicting that Solana will outperform Ethereum in the current market cycle, while reaffirming his long-term commitment to Bitcoin as a reliable store of value. He asserts that the core thesis of Bitcoin as a superior store of value remains intact, further strengthened by the introduction of exchange-traded funds, ETFs, and participation from major Wall Street firms. He recognizes a shift in viewing Bitcoin primarily as a savings account, with stablecoins serving as a medium of exchange. This dual-currency framework allows Bitcoin to appreciate while enhancing the utility of stablecoins, protecting against currency debasement and reinforcing Bitcoin's value within the traditional financial system. Let's go back to the interview and watch more clips to gain insights from Anthony Pompliano.
I think the core thesis of Bitcoin as the superior store of value has not changed at all. I think if anything, we've seen that thesis play out, and it's accelerated now that we have the ETFs and many, large Wall Street firms all participating. With that said, I do think that one thing I've changed my mind on is I used to have very deep conviction that Bitcoin was going to be this great medium of exchange. It could replace a bunch of currencies, etc. Now, maybe that happens. Maybe it doesn't. I have less conviction that it is going to happen or needs to happen. Instead, based on what I'm seeing in the market and based on the data that we're getting, it appears that people have chosen Bitcoin as that store of value. They kind of treat it as their savings account, and then they are using stable coins as their checking account or their ability to spend. And so instead of having a currency competition, what you're actually getting is two currencies rising together. You're getting Bitcoin rising as that store of value, and you're getting US dollar stable coins rising as that medium of exchange. And I think that's great for the dollar, and I think that's great for Bitcoin. If you think in the traditional world, that's the three accounts you have, right? You have a savings account, you have a checking account, you have an investment account. What you do is you get paid into that checking account. You move some of your money over to your savings account. You don't touch your savings account. Rule number one of savings account, don't touch it. Your checking account is for living expenses and for spending. And then your investment account is for getting out of your currency and getting into investable assets that will appreciate through time and inflation. And so I think that Bitcoin is really taking on the role of the new savings account. It is the thing that people are saying, I'm going to convert my native currency into this Bitcoin thing. I'm going to leave it in that account. I'm not going to touch it. I'm not going to spend it. I'm not going to sell it. That's my savings. On top of that, I'm going to keep a checking account, whether electronic account or digital, and that's the money I'm going to spend. And then I've got an investment account. I'm going to hold other assets, whether they're stocks, bonds, currencies, commodities, whatever else. I'm going to have an investment account. And so Bitcoin doesn't need to replace everything. Bitcoin, if it replaces just the savings account, it's going to end up being worth much, much more than it is today. But that framework of having a checking account, a savings account, and an investment account now allows you to overlay the crypto assets into that traditional system. And rather than put your money into a depreciating currency like the US dollar and only earning, let's say, half of 1% interest annually in your savings account, you now can go and put it into a hard currency like Bitcoin and allow it to continue to gain purchasing power and do the role of your savings account without having to worry about currency debasement.
Bitcoin price recently extended gains above the 69,200 resistance zone, but is now experiencing a correction, trading near the 67,500 pivot level. Despite an attempt to test the $70,000 resistance, Bitcoin faced challenges, leading to a decline below $68,500 and the 100-hourly simple moving average. A break below the key support triangle at $68,500 has occurred, indicating potential for further downward movement unless a close above $66,500 is maintained. However, the price has not tested the $70,000 resistance yet, creating a high near $69,428 before correcting gains. The decline below $68,000 signifies a challenging moment, with consolidation above the 23.6% Fibonacci retracement level of the drop from $69,428 to $66,564. On the upside, resistance is anticipated near the $68,000 level and the 50% Fibonacci retracement of the previous drop. The first key resistance level is at $68,750, with a breakout above this level possibly leading to further increases towards $70,000. Conversely, if Bitcoin fails to rise above the $68,000 resistance, it could initiate another decline. Immediate support is located around $67,000, with significant support at $66,800 and $66,500. Any further losses may send the price toward the $65,500 support level. Technical indicators reveal the MACD is losing momentum, while the RSI remains below the 50 level, indicating potential challenges ahead. As we come to a close, what are your thoughts on the resilience of Bitcoin and cryptocurrencies in the face of political fluctuations? Do you believe the dual currency framework of Bitcoin as a savings asset and stablecoins as a medium of exchange will reshape the financial landscape? Please share your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching, and don't forget to subscribe.